you, Chris, for doing this, buddy.
Sure thing, man. Glad to be a
And
part of
we are live. Thank you guys for coming to Risk Management. This is Cardone Corner. We got Chris Inks, we got Gary Cardone, we got myself, Samuel Arms. Today, we're going to be talking about risk management, and probably the best way to start that is what actually is risk management, which is going to be great for me because we've had multiple conversations between myself, Chris, Gary. And so for me, I'm looking forward to this because I'm going to get to learn how I should be using risk management in my own life, not just as far as I think Bitcoin and crypto goes, but some other factors too. So I know I'm looking forward to this. So I guess I'll kick it off to Gary first and just get started on why are we even having this conversation? Why did you think we should even be talking about risk management to begin with?
Yeah. Thank you, Chris, for being here. Sam, thank you for opening up. Risk management, I've been a trader since I was 22 years old, and I hated the risk management teams because they would come in and tell me what I was doing wrong. They're kind of sitting on the bench, watching my trades. And Glenn Laphart, I'll never forget, Glenn's in Houston, runs his own risk management team now. I found it to be invasive. They would ask questions. I didn't think they had the right to ask me any questions on my trades. And I tell you, though, as I have matured, I really like having a guy like Glenn Laphart busting my chops. And then I have a CEO overlooking him and making sure he's not putting too much pressure on me. To have a third party, whether it's software or a human being, overlooking your positions and asking you questions, very, 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 very valuable. Okay. I know for the alpha male or the alpha female, they don't want to ask anybody for anything. It's kind of like, hey, I know what the fuck I'm doing. I've been in this trade. You're a paper player. I'm a real player. And all the responses that go with that. But if you're really trading a large position in your management team or a small position, which I think we should talk about, small versus large positions, concentrated versus dilution. We could spend 4 hours here. Okay. We can go down so many rabbit holes. Yeah. The first piece of risk management for me is, who am I as a human being? Am I the guy that does better with managing the risk from the side, like a Glenn Laphart, who just looks at numbers and looks at the whole company and says, hey, Gary's trading $1 billion over here, and his value at risk, called VAR by the risk managers, his value at risk is 800 million, and he's doing $1 billion today. Like, how'd that happen, right? So these systems don't stop people from doing trades, right? They're normally caught post facto. One of the reasons I got really excited about crypto is that I've seen every major bank on the planet, and I do mean every, capital EVERY, every major bank on the planet who had trading operations at some point or another, even with their sophisticated risk management systems, blow an entire division up. Okay, like Monster blow up, CEO loses his job, trader's a rogue trader. If that can happen in paper markets where you can constantly create new paper, GME, GameStop, very good example. One night, they just issue 10 million more shares of stock, right? With Bitcoin, you can't do that. And that's really been my interest in Bitcoin. I'm like, hey, I think all these risk management tools that the Goldmans of the world use, I think they fail. And they failed on paper. I'm quite certain they're going to fail in Bitcoin. Back to where I was headed, though, my point of the game is, I need to know who I am and how much, tolerance I have for change. I think that's really all price is change. And it's how I am responding to that. For instance, Bitcoin's down $2,000 today. I'm not panicking on that. Like, I have a trigger here set for $60,000 to alert me. Otherwise, I'm probably not going to be looking at the Bitcoin price. The reason this chart's up right behind me, not that you guys can see it, I was looking at iron, which has moved, close to $14 today in a market where Bitcoin's down. So I use these as pictures. I don't use these as, I'm going to go trade this. And But the most important piece for me is to understand as a human being, am I a trader or am I a risk manager? If I'm not a risk manager by nature, I need somebody to look at my trades. I need a Chris Inks to look at my trade and go, hey, Gary, like how much pain can you suffer, dude? Like, Gary, if you have 500 Bitcoin and the price went down by half, would you get any margin calls from your bank? Like, it's not just my Bitcoin. If my Bitcoin position went in half, pretty convinced that the whole market has gone down, right? So now does the whole market hurt me because I have a bank calling me because I own iron through my bank where there's mortgages and there's credit lines, right? And they might call me up and go, hey, dude, like iron's off now 40% and we don't like your position. We want you to liquidate. Okay. Or we are forcing you to liquidate. These are things that unless you really understand what's happening, like if you have 23% credit debt on a credit card, I think Chris and I are both going to say, hey, go handle the credit card before you start trading. Because the problem is you can't have that drag on your system when you're trying to escape velocity, right? You're trying to make some generational wealth and you got this 23% credit card note that your family keeps tagging, right? Like you have to get all the shit off you first before you can actually do this for a living. Chris, how much have I left out? I know there's...
Man, you know, I think what you said is great, honestly. You've kind of even touched on a few things that I'm really adamant about. I always tell traders and investors, you know, I said, listen, you know, before you get in the market, you got to figure out who you are as a trader or investor. You got to be honest with yourself because we're real good at lying to ourselves as human beings. This is par for the course. You know, we tend to overplay how good we are at something or how skilled we are at something, and we downplay how bad we are, the mistakes we make. And so you have to go in there. And the first thing I always tell somebody is, listen, you got to go and figure out, well, where are you currently sitting in terms of your current income, your current wealth? Where are you looking to go with those two things over the short, mid, and long term? You have to look at how much, you know, and this is where it really becomes, you know, how honest are you with yourself? How risk adverse or risk tolerant are you? You know, because these things are going to affect how you approach the market. You have to understand, listen, how many hours a day do I actually really have to do this? And of those, how many hours do I actually want to do it? You know, you can want to spend 10 hours a day doing it, but if you're working a full-time job, you may only have an hour and a half a day to do it. You know, this is where the reality hits the road, right? This is where you got to figure out, okay, all these things are going to tell you first and foremost who you are as a trader or investor. And from there, you can start figuring out your risk. The problem is most people jump into the markets and they're just like, oh, I'm just going to ape into some whatever I heard because I saw something online about some guy just turned $300 into $3 billion in the last 24 hours or something stupid like that, right? And so, again, as human beings, we tend to focus on these stories of greatness, on these stories where somebody makes a lot of money. And we fail to understand that most people aren't doing that these are the outliers, right? But we base our understanding of what we think we can do based on the outliers. And so at that point, we're already starting to take on risk before we've even entered the market. Ned Davis, amazing guy. He's a senior investment strategist, started his own company a long time ago. He's been around the markets a long time. But he has one of the greatest quotes, I believe, when it comes to markets. And he says, we're in the business of making mistakes. Winners make small mistakes. Losers make big mistakes. And I think, you know, if you read that and you're not getting it right off what it is, you need to keep reading it until you do. Because basically what he's saying is, listen, we are, you know, in life, much like in life, really, trading, the idea is, generally speaking, you're more likely to get a trade wrong than you are to get it correct. I don't care how long you've been doing this. You're more likely to get it wrong than you are to get it correct. And so if that's the case, if you understand that and bring that reality into your thought process, well, then that means, listen, I need to focus on my risk management. Because if I'm losing 10%, 30%, 50% on a trade, all of a sudden I got to make a lot more than that up just to get back to even. If I lose 50% on a single trade, which a lot of people do, they go in, they're over position size, they're over leveraged, they get liquidated, they're down 50+%. Well, now you've got to make hundreds of percent more. You don't just have to make 50% more. You lost 50%. And that's just to get back to even. And then all of a sudden, your emotions get involved and whatnot. So, again, much like in life, I think the real issue is that people just in general, they aren't great at risk management in life, right? We look at and we go, okay, well, how many people are in credit card debt? How many people, have foreclosed on their mortgages? How many people are getting their cars repossessed and whatever? They were fine while everything was going good. They weren't prepared for when things didn't, or when things stopped going so well. And so, I always talk to our students that, and just anybody that I talk to is willing to listen. The reality is you can't be one way in one area of your life and expect to be something opposite in another area. If basically in your life, if you're not, focusing on risk management, if you're not protecting yourself, right? It makes it really difficult when you get into trading to do the same thing, because you don't have, two different personalities. You have yourself, and the way you look at the world is the way you're going to look at trading. And so that's why a lot of people do it, right? Like you said, you didn't want, somebody else coming in there and looking over, a lot of people look at their risk as the boring side of it. It's the, oh my God, it's the one where I have to do work. Most people are used to getting in the market, just throwing money in and hoping it goes up. But part of risk management is having a plan. What is your plan? And specific to trading, it means, where am I entering and why? Where is my stop loss and why? Where is my take profit and why? It's not even just a simple, oh, I'm just going to put it here, here, and here. Because a lot of people, what they'll do is they'll fake the risk management part. They'll get in there and go, oh, well, I've got a stop loss. I'm just going to put it right here. But they put it so close to their entry that they have no room for price to move against them a bit before it goes toward their target. And they do that because they go, oh, well, if I put it lower, I'm going to get less profit. And see, so people end up focusing then on profit rather than on the risk. And I think that's a big, big issue when it comes out there, right? So I know Gary's been a part of multiple exits. He's done a lot of great stuff in business. And so Gary, probably more than most people, understands the importance of systems, right? You get where you want to go, it requires systems. And if you focus on the system, it gets you where you need to go, right? But if you're just focused on the profits, if you're just focused on the end result, you're going to have a lot of trouble getting there, because you're not doing the tweaks that you need in the system. You're not, repeating the steps that you need to repeat as you need to repeat them to get there. And it's the same way in trading. So again, people focus on profits. They get in, they go, man, if it hits this target, I'm going to make X amount of dollars. And they're all excited about that. But the problem is they should be focusing on how much they're putting at risk, right? If I'm looking at, let's say, Bitcoin, if I jumped into Bitcoin right now and I put that stop loss right below me and I say, man, I'm looking for it to go to 100,000 from here. Stop loss is just $500 below me. The problem with that becomes, well, why am I getting in right here? Does that $500 stop loss make sense? I mean, logically, when it comes to the analysis of the chart. Because if it doesn't, then it doesn't, just because I'm throwing it there doesn't mean I'm actually mitigating my risk. I'm actually increasing my risk because I'm not properly putting that stop loss where it needs to be. But a lot of people, again, when they're starting to get into trading, these are the things that they go through pretty exclusively with anybody that gets into trading before they really figure it out. And each one of these points is a point of failure in your overall, just your trading, your overall strategy, your overall risk management.
So Chris, like maybe I think that's really good summary of the issues, but let's back up. Because to me, when we start identifying who we are, and this is going to play a little weird for you because of what you do for a living every day, but I think you'll understand where I'm going. For a guy like me who has other responsibilities, okay, like if you have a job, I was on Space the other night and this lady was talking really low, and I'm like, hey, lady, nobody can hear you. And then it dawned on me, oh, the reason nobody can hear her, she's in her office working for someone, and she's talking on Spaces as a speaker, co-host, and she's working for someone. And I pulled her down off the thing. She said, hey, why'd you pull me down? I said, well, I couldn't hear you well, And I wanted to also say, and I'm not going to support you in stealing from your employer.
Yeah.
Like, go risk manage your life. Okay. Like, you should not be on this space if you're working for somebody right now.
Yeah.
Like, you're stealing from them. So where I'm headed with that is I traded the most violent commodities in the world between 20s and 40s, and I stopped doing it. I mean, 20 years of it, I'm like, okay, I'm done, dude. I'm done with this. And today I'm a long-term investor. The question I have, to me, the first question people should be asking is, am I an investor or am I a day trader?
Yeah. And
these are very, 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 one's like being a professional boxer that's going to have a 50-year life versus an MMA fighter who's going to last probably 5 years. Yeah. Right. Like, I'm really comfortable. The duration and duration and size, which to me are the most important critical pieces of investing and or trading, doesn't matter, but they're different. Duration and size is what causes the problems. Either the size is too big or the duration is unrealistic with what you were expecting. And we can bring in all types of other assets. We could bring in houses, for instance, and say, hey, who makes the decision on that investment?
Yeah.
Because that's a really bad investment, right? It goes up 100%. Nobody even ever considers selling it, but they call it an investment. But let's talk a little bit about where, because like Sam's a long-term trader. He doesn't care if the price is off $2,000. He's just trying to figure out, hey, how can I buy some more at 60 and hold on to it for 4 years? I'm not really going to pick the best price. I mean, he's going to buy 3 Bitcoin if he's lucky this year, right?
Yeah.
So how do you do that? How do you advise your people? Hey, are you a long-term player or a short-term player?
Well, I mean, that really, there's nothing I can do. And Lord knows I've tried over the years. You do this for 30 years and you kind of talk to, thousands, tens of thousands of different traders and investors and whatnot. And the biggest thing I try to do is at least get them to understand that they need to figure that out. I can look at what they're doing and they'll say, oh, well, I'm this. And I'll look at what their track record is. I go, no, you're actually this. But they're going to argue with me all day long until they accept it themselves, right? So at the end of the day, it comes down to this again, being honest with yourself. This is such a thing that we have such difficulty with as human beings. Again, we tend to see the good as really, really, really good, and the bad is not so bad. But how does that really help us, right? Because again, we're talking about risk here, not just in markets, but in life. If you can't understand, be realistic with yourself about the negative of something that you've done or something that you're doing, you're just exponentially putting yourself in a greater amount of risk. So when it comes to somebody coming in, you have to absolutely be honest with yourself. And until you can be honest with yourself, you're going to find that you're going to have a lot of difficulty. So how do you do that? Well, there's no easy way to do it, honestly. You can ask the questions that I was asking earlier there, but write them down, right? I'm a big proponent of writing things down. I see Gary here writing down a lot. I know your brother talks about writing down notes and things a lot. There is something that, especially the younger people today, I think they missed out on, is this, your brain really focuses more on what you're doing when you're actually physically doing it. So you can sit here and even type on a keyboard, and it's not the same thing as going through the motions of actually writing on a page. And so what that does is it gets your brain to focus on it, and it gets your brain to kind of open up a bit and really start, thinking more versus just keep it in your head. As long as something's just in your head, by the way, guys, as long as whatever you're saying about anything is just in your head, you don't have any written proof or whatever, it's always just in your head. And as long as it's in your head, you're going to do that thing that I was talking about, which is you're going to make good things or somewhat good things seem really, really great, and really bad things seem like, just minor kind of things. You're going to, set yourself up into a poor situation there. But yeah, I think, you go through those questions, you write down the questions, you write down the answers, and you're kind of reading through them versus just thinking about them in your head. That's one way that can kind of help you potentially become more attuned with who you are. because you have to understand that, right? Again, Samuel, looking for the longer term, holding on for a bit, just saying, okay, how can I get more? Gary, the same way. It's like, listen, I don't care what the price is. If it's dropping lower, I'm going to be more vigilant in trying to figure out how to get more, to buy more. But at the end of the day, I understand where I sit. I understand what my goals are. Again, for those of you that don't know, Gary's talked about this a lot. He is not focused on price. He's focused on how many Bitcoin he can acquire. He has a number that he's trying to get to, and that's his focus. So see, Gary knows who he is. He understands what he's doing. So when you do that, now you can go, okay, well, now I can sit here and say, well, these are my goals. So where am I sitting at risk-wise? How does that affect not just my whatever I've got in the market, but if things don't go the way I'm looking, how does that affect me overall? How does it affect every other thing about me? How does it affect my bank account, my companies, my investments, my positions, all this kind of stuff? How does it affect what I'm trying to build for my family, for my kids as they get older, right? This is all encompassing. Everybody thinks risk is just that trade you take. That's just one little part of it. I mean, even as far as trading goes, and this should be really clear with crypto, is what exchange are you trading on? We've seen so many exchanges go up over the last few years, right? Everybody losing money. What are you putting your money in? Are you doing in that silly Celsius nonsense, trying to get 5,000% APY over a year or whatever? I mean, you're taking on a significantly lot more risk trying to do that, as we saw, right? What pairs are you trading? Are you trading Bitcoin? Are you trading some shit coin that's out of 1,000? It's at 998, in terms of market cap. All these things are adding or taking away the risk that you're getting involved in. And so,
well, Chris, let's do a couple of things. So I have two choices. I want to come into, let's call it the Bitcoin world. I like the digital asset world. I have a job. I'm Samuel. I make $100,000 a year or whatever Sam makes, right? And he's got expertise in journalism, politics. He's expanding his base through me. He's decided he's going to be an investor and not a day trader. So let's say that how much time does he need to allocate to being a long-term investor? And does he look at buying, 37 different equities and Bitcoins, or does he buy one or two? Like, I think diversity and concentration are grossly misunderstood concepts. Yes. that are most definitely part of the risk management. Duration, what your goals are. Like, everybody thinks this is about value at risk, but the truth is these are really basic things that you should even consider in a home. And I mean, I have a scenario that I want to walk you through, but let's say Sam is made a decision he's going to be an investor. How much time and energy does he need to put into risk management other than what are the core things that he needs to do? Yeah.
So, I mean, the longer your time frame, the less time you actually have to spend, focused on that investment. Historically, assets appreciate, right? Historically, their price moves to the right and up. So, again, the longer term you're looking to be invested in something, the less attention you have to give it during the way. The attention you give it's at the beginning. Again, you sit in there, but you have to be realistic and honest with yourself about what are your goals. If your goal is, listen, I'm buying Bitcoin, I'll sell it, I don't know, 500,000. Okay. Well, guess what? If it's jumping up to 80,000 and down to 60,000, up to 100,000 and down to 50,000, up to 150,000, you don't care. None of that should be on your peer review. There's nothing that should be something you're worried about. Spend your time, building, if you've got a business, building that. If you're trying to build influence, do that. Spend your time doing those other things that are going to contribute to your growth overall, your income coming in. Because here's the thing. A lot of people will get in there and be like, okay, I want to be an investor. I want to do this long term. And they'll put their money in that. But again, they're not mitigating risk in their personal life. They're not focusing on upskilling and relationships and all these things that we need to do to kind of continue to excel, right? And so what happens is when something happens, and invariably something will happen, guys. That's life.
I was going to take you on to that, right? So Sam grabs a couple of Bitcoin at 60. His target is, let's say it's 300 grand. He wants to hang around for 3 or 4 years. He thinks he can 5X it. He meets a nice girl. Girl says she wants to buy a house. He needs to sell the Bitcoin. Now, how does his risk management program help him with this new outsider who has no investment? Like you guys that are hanging around girls and asking them for what their investment advice is, knock it off, dude. Like, why would you go to some idiot that knows nothing about investments or talk to them about Bitcoin? You spent 50 hours on Bitcoin. They've spent an hour and you're expecting them to agree with you? Like this is not a family decision. Like I've never made these decisions for I make all the decisions financially for my family. Like to your point, in all the equity plays that I've been in, dude, there's a time when you sell.
Yeah.
Okay. Because you know why? Because the multiples, the value of which private equity and other companies see these companies, it goes up and down with the market. It might be valued at 3 times earning 1 year. Then it might be valued at 25. At 25, I'm a seller, dude. 25x anything, sell it. Okay. And then start over. But like, how do you deal with the family? Because I think this is a big piece of the risk management issue that goes wrong, right?
Yeah. So I think, I'm a lot like you. I don't take anybody else's, if I'm dating somebody, if I'm married to somebody, whatever, the investment is what I do, and I think you get into a problem when you go, okay, well, this is what I did, but you're here now and I love you and you make me happy. And I want you to feel a part of this. So I'm going to listen to you. No, don't do that. If they don't have the experience in there, and if they don't have the investment in there, these things, that's not, people are going to probably get flack for this, give me flack for this, but it's not their decision to make. You came in with a plan, right? You came in with a plan, and at that plan, it was set up with your risk management as you saw it at that time. And I'm just a firm believer that's what you should, follow through with. What I was getting to earlier was a lot of people, they don't see it that way. And invariably something happens and all of a sudden they need money. So they have to sell. They're a forced seller. In the market, there's always 2 types of sellers. There's forced sellers and there's sellers who just, decide that they're going to sell. You don't ever want to be a forced seller. So if you're looking at investing, again, the goal is you get there, you invest, and you focus on what you're doing to make sure you have income coming in to keep you afloat, to keep you okay, to keep you doing things. So you don't have to then, break your rules, break all your risk management, break everything and go and sell that, because guess what? Now all of a sudden you're behind again. And some people say, well, yeah, but if you got to do it, you got to do it. No, I get that. If you got to do it, you got to do it. But the focus should have been at the beginning. If I'm going to invest in this, how do I manage the risk in my life that might force me to have to sell that? Because I don't want to sell that. And that's the part I think a lot of people miss. So they go in and they buy. Again, they go in, they buy, and they invest, and it's going up and it's great. And then something happens. Maybe they lose a job. Maybe there's a medical emergency. Maybe there's something, right? But they haven't done all the focusing on that other area of their life where they could continue to maybe have, maybe multiple streams of income coming in, where they're working their way up the ladder in the company they're in, or they've got a business that they're continuing to build out and increase. And the goal should always be to continue to do more, to bring in more, because the more you can do of that, the less likely that you're going to have to be to break your investment. And the problem is people they'll break their investment and then sometimes they won't ever get back in. A lot of times when they do, they'll never get to the point where they were hoping to get. And again, it just comes from the whole idea of thinking that the risk was just the trade or the investment, and missing out that the real risk was what are you doing in your life? You're not focusing on the areas in your life to make sure that you don't have to sell that investment before you mean to.
So for the long-term investor, the advice is stay focused on what you're great at, get better at that, and keep doing what you said you were going to do with your core investment, whether it's NVIDIA, Bitcoin, Smitcoin, or whatever your thesis is. And it doesn't really require a lot of time. Risk management doesn't require a lot of time. What you're really managing is the risk associated with your income streams.
Yes. Yes.
Right.
100%.
Now let's just say that I'm that guy, or Sam's that guy, long-term investor. We're not needing to look at the markets, and the price of the underlying equity. Let's say that I'm a Bitcoin only guy. That's my whole holding. Now you might say, "Whoa, dude, all of your holding?" That's a bit of a non-risk management thesis. Which the truth is, it's not all my holding. Okay, it's all my speculative holding, all my cash liquid holding. If it went down by 50%, do I change my tune? Like, is there any scenario where my risk management plan for 5 years changes if the price goes down by half?
Yeah. So, I mean, exactly. That's what, but this is what I keep talking about. This is the thing you have to know prior to you get in. Where is your, oh my God, I'm going to be sick level? Where is that point at which you go, listen, I may be wrong on this? Because if you don't identify it and you don't write it all down there at first, when you first get in, the problem becomes now you're in the trade or you're in the investment. And now it's all emotional. And you don't have any, reason why this is the level that you need to be out of it. You don't have anything written down saying, listen, at this point, it puts my, because again, in your case, for instance, we're talking about future, what you're leaving to the kids, this kind of thing, this whole thing, right? But this is just one part of it. So at what point does this get hurt enough that it starts potentially affecting that overall plan? And you have to know this, right? You have to know this when you get involved, whether it's 1,000 Bitcoin or it's 1 Bitcoin or it's a half a Bitcoin, everybody's different, whatever your situation is. When you get in, you absolutely have to know where that pain point is. If you don't know where it is, then what happens is when you're in the trade, it all becomes emotional. And all of a sudden you're making emotional decisions versus rational decisions. And that's where people get hurt all the time. Again, not just in the markets, but in life. If you get into a relationship, we'll talk about this. You get into a relationship and you don't have any hard nose. You sit and you go, well, I'm a guy. I'm going to get in a relationship with a girl. She treats me like crap. She talks down to me. She's not respectful, as a human being or whatever. If I don't have that before I get in that relationship saying, listen, if she does that, I'm out. Then especially if she's hot, right? We're going to get in there and we're going to make emotional decisions. We're going to be like, well, God, she's so pretty though. And when she's nice, she's really nice. But man, when she's mean, she's really mean. But we're going to keep making those emotional decisions. Same thing with women, with guys that they get up with, right? And the guy turns out to be, maybe abusive or a real jackass. And she goes, well, but when he's nice, he's really nice. Well, yeah, but before you got in this, you didn't say, listen, if he hits me, I'm out. That's it. There is no turning back. So when you're in that situation, your emotions are in there, you have feelings, all these things are in there, and it makes it really difficult. So yeah, again, any part you're in life, you've got to understand where that level is that you exit whatever that thing is that you're in. That way you don't have to deal with the emotional side of it when you're in it, because you'll always lose when you're dealing with emotions.
Chris, it sounds like most risk management is building a plan and sticking to it. So when do you know when your plan is no longer effective or when you actually need to change the plan?
Yeah, so that, again, it's going to be depending on what your plan is. If we're talking about an investment, it's a little bit more difficult, right?
My current plan with Bitcoin has always been, I view Bitcoin as just, for me, as a retirement plan, right? So I am really long-term. I don't know what my selling price is. I really don't. I view this as, hey, in 10 years, maybe my Bitcoin's something that I can just use as collateral for loans and use fiat. So I myself have not developed a plan of when I think I would sell, because I even think $1 million Bitcoin could be cheap 10 years from now, right? So how do I know when I do need a plan to figure out, okay, I should have some selling point because things might change? Because that's what's tough for me is I don't know if I ever want to sell my Bitcoin for dollars. If I think that I can one day use it as leverage to just use it as collateral to get dollars and still not have to give it up. So that's one of the things that I really struggle with.
Yeah. So the best thing to do when you're looking at that is say, okay, well, what is the rest of the plan, right? What is my bigger plan in life? What are my goals in life? How do I plan to get there? See, this is the thing. People generally don't have a plan for life. People think success just happens. It doesn't just happen. Success has a formula. It has a system. You put that system and to work, and you'll get there. So I would say the first thing you would do is, if you don't have a plan, if you don't understand, if you haven't sat there and done the real deep thinking about where do I see myself in 10 years, 30 years, 50 years, retirement. And this includes everything, because, you're talking about Bitcoin, not just as Bitcoin, but you're talking about Bitcoin as a big part of your overall life plan. So you got to sit down and ask yourself the hard questions and be honest about yourself. And it's not going to happen overnight. It'll take a little bit to get the answers and to get the real answers. But you get there and you start writing them down. Where do I see myself 5, 10, 20, 30 years? Where would I like to be? What are and it's not just simply where am I monetarily, wealth-wise, these kind of things. It's, if you're building a company, right? It's like, okay, so where would I like this company to be? Where do I plan for this company to be at this point? What are the steps that I have to take to get there, right? So again, we're putting together this bigger plan. And then once you figure out all this, then you can go to your Bitcoin and go, okay, so at what point, at what price with my Bitcoin here, does it make more sense to actually go ahead and cash out than it does to let it keep dropping in relation to my overall plan? Because the reality of it is, Bitcoin is not just the plan. A lot of people talk about that, Bitcoin, but Bitcoin is just one part of should be just one part of your overall life plan. Where are you headed? What are you doing? How are you going to get there? And once you understand that, now you can start quantifying where that Bitcoin price and however many Bitcoin you have at that time, where it starts making sense in terms of where you're at or where you're not at yet. And I think it's probably, if you're looking at something other than simply technical analysis about where, if it drops below this level, then Bitcoin's probably going to drop to this other level and it's going to take a few years or whatever. To really get beyond that, it becomes a part of, again, your whole life. Where are you at with this whole plan in life? But most people don't do this, right? Most people, it's a work. It's
Chris,
work.
I think with his strategy is very similar to mine. If a young man, he's 27 years old, let's assume he makes 100 grand just for easy math. If he's got a Bitcoin today or half a Bitcoin or whatever he's got, his scenario sounds very similar to mine. See, I ask you a question, hey, price gets cut in half, should Gary start panicking? And your answer, my risk management answer, should be, well, let's go back and review what the goals are here.
Yeah.
The goals were to add Bitcoin.
Yeah.
You didn't have a price. Like, you were just wanting to get to 1,000 Bitcoin. Now, I'm not sure I want to get to 1,000 Bitcoin at $1 million each. Right now, I'm looking at it going, hey, 1 million Bitcoin would cost me $60 million, right?
Yeah.
Like 1,000 Bitcoin. How could I possibly do that? And you guys, the reason I use these big numbers is just remove some zeros, okay?
Yeah.
Doesn't matter. You want to make one Bitcoin, 1,000, 10, it doesn't matter really. But for me, I always set these goals that are way, way up here. I think this is an unbelievable asset. So I set the goal there and go, okay, let me stay focused here now. And I've straight off, dude, I've got now stocks that I've got some equity in mining companies that are associated with Bitcoin. I've got an ETF. I've got, probably some stuff I probably shouldn't have, but I think they're going to just really outperform. I've added pieces to my equation that I probably shouldn't have. They're probably outside my risk management thing. And I've kind of convinced myself my own dialogue. Well, look at me. I'm a media personality now. I have to own some Doge just to talk about it or whatever. Right. And look, if these trades go bad for me, they're play trades. Okay. Like it is probably distracting. Like it's never going to make enough money for me to like, oh, wow. Let's say I knew that I was going to go to my grave tomorrow afternoon. I should not spend any time on Doge. Okay, let's be honest. Right now on the Bitcoin, maybe different story. But if Bitcoin were to go down 50%, see what I like about his plan for his 10-year plan, he can actually now start going, okay, I'm going to start saving $3,000 a month of that 100 grand. To then be able to allocate to Bitcoin. Now my DCA strategy is $3 grand a month, dude, every month. I know exactly what I'm doing and I'm not straying whether it's 30 grand or whether it's 50. And now that you know there's volatility in Bitcoin, he could actually do some planning, squirrel away some of that fiat, stick it in something that doesn't go bad, and then deploy it when Bitcoin has one of these 15 or 20% down days, which is exactly what he asked me 2 days ago. Hey, how do you plan how do you go find other money, dude, to deploy here? If the price goes down, well, that's what risk management is. Yeah. You got to decide, hey, if the price goes to 43,000, dude, are you a buyer or a seller? Because I'm a fucking buyer. Like really a big buyer, right? Like if someone told me they thought that was even possible, I would start squirreling away a bunch of money.
Yeah.
And holding off to the side, right? Waiting for that moment. You could just literally and it doesn't require any work. Stick a bid in there. Hey, I'll buy 3 of them, 3 Bitcoin at 49. I'll buy another 3 at 46. I'll buy another 3 at 43. And you don't even care. You just see fills. That's the best investments I've ever made when I don't even know I got hit.
Yeah. Yeah.
Right. It's planned. It's just real methodical almost.
Yeah. And when I think the other big point we need to make here is that there are no guarantees in the markets, guys. Okay. We believe, I know I do, I know Gary does, I know Sammy does. We really believe in Bitcoin and its potential. But at the end of the day, there is no guarantee other than if you're new to markets, you're going to lose money, or other than if you're in markets, you're going to lose money from time to time. And the newer you are, the more money you're going to lose, the more often you're going to lose it. Those are really the only guarantees to being involved in the market. Everything else is, historically tends to go up over time. Sometimes things happen and we have longer recessions and whatnot than expected. So it takes longer to get there. But generally speaking, asset prices go up, over time because liquidity continues to enter, the whole, especially these days, the whole global economy, right? So when you're looking at that, you just got to make sure that you really understand it, because I see a lot of people who get in, especially at the lower end, because they're trying to get as rich as possible, as quickly as possible. And again, that just brings more risk into it, because you're not set up and prepared for what if something happens in your life where you now have to liquidate those investments. What happens if the investment doesn't work out like you intended? So you have to look at that and then go, okay, well, the money am I putting in? Am I going to be okay if the worst case scenario happens? And you always have to figure out what your worst case scenario is along the way, by the way, in your risk management thing. Always understand what the absolute worst case scenario is, and then go, am I going to be okay? Is my family going to be okay if that happens? And as long as the answer is yes, you keep doing it. Now, real quick here, Gary touched on this idea of diversification and consolidation there. Yeah, I'm just having bad time with words here today.
No problem.
Again, I'm a firm believer in you create wealth through concentration, guys. Okay. So pick something you believe in, have a reason, real reason to believe in it, and focus on that. That's kind of what Gary was talking about there. The other things he's doing, maybe probably outside his risk management thing. If you're trying to build wealth, which I know many people are watching this is what they're trying to do, you want to concentrate. Okay. If you're trying to protect wealth, you then usually look toward diversification. There's a lot of people out there now that say, no, if you're in crypto and you want to you need to diversify into all these small cap alts or whatever. And, basically you're hoping one of them hits. Well, that's not really trading. That's hoping, that's wishing. And you can't in life get anywhere just hoping and wishing. Again, you need plans, you need, goals, you need plans on how you're going to get there step by step. You got to do these things. So, look at concentration, focus on something and just focus on that. And then when you get to those levels of wealth that you'd like to get to, then you look at diversification to protect that wealth. So, again, you don't want to put yourself in a bad situation right off there because you're like, oh, well, I only make, $2,000 a month. And I really need to do something for my family's future. So I'm going to really kind of stick $500 a month that I can't really afford into this every month because it just has to work. Again, what happens if along the way, I don't believe they're at the top's in right now for this cycle, but let's say it was, and you were getting in right now thinking, hey, 100,000, 200,000. Well, all of a sudden that market pulls back against you. Something happens in your life because you're overextended into that, right? You're not being able to pay your bills and do your things as you need to. Something happens. Well, now not only do you have to sell your investment, but now you're selling it at a loss. So these are real things that people need to think about that most really aren't. They're just like, listen, I'm going to take my student loan out. I'm going to throw my student loan into some meme coin and hope it makes me money. I mean, that's not a great plan.
Yeah, to really stick a pin in what he's saying, okay, just because everybody goes back to Warren Buffett, I think a lot of the risk that occurs for people is happening inside the family. Either the trader's not telling his girlfriend or wife what he's really doing, which is he's probably sitting in front of a computer screen for 8 hours a day, and he probably ought to just go get a real job, because you have no edge, dude. If you don't have an edge in trading, it's really hard to make a living if you don't have an edge. The concentration piece, I've been concentrated my whole life, dude. I look at people that diversify and I literally just look at them and go, the only thing that happened to you is that you no longer have the kind of conviction you had on your last trade, which made you super rich, dude. You just do not have conviction, so you spread it around. That is not what Warren Buffett did. Warren Buffett's 52% of his portfolio is still Apple, man.
Yeah.
Okay, that's massive. Okay, I don't know how much cash he has on the balance sheet, but he has a massive concentration of cash sitting there, doing nothing, making 4 or 5%. But he's a monster consolidation play. He's not hey, I'm going to go bet on the Qs.
Yeah.
Right. And I just look at this trade for a guy that's 27 years old. It is extremely difficult for me to see this staying here at $60,000. I see under no circumstances, which by the way is my worst case, that in 10 years we're Bitcoin at $69,000. Now, how could that possibly be good for me? Everything else is crushed into oblivion. Okay, like if 69,000, all that did was just stay at 69. You have to assume that the dollar is just like. Now, asset prices in that scenario should be off the rails. Yeah. So I don't know why Bitcoin wouldn't also be off the rails. I just had somebody call me yesterday, dude. Oh, you haven't been to my home, but I had my house up on the market for 14, took it off because the guy that bid it had a coronary, major coronary. I got people calling me going, hey, we think your house is worth $18 million today. Well, I got in at 8.6 and no money, no down, no money. The bank gave me 100% of the money. It's cost me 6%. And that's 300 Bitcoin, dude. Like it becomes very compelling for me to see, this is a risk management thing. I bought a house for $8.6 million without any of my own money. And now it's worth 14 to 18 million. When do I sell? Because I never thought about that. And most people, when they buy homes, never think about the exit, ever. So here I have a monster amount of money, not the biggest investment I have, by the way, but it's tied up. And this is not an investment. I mean, do I really think this house is going to go from 8 to 18? I'm not even sure the 18's real. Could disappear tomorrow morning. Or is it going to go to 36? It's not going to go to 36, dude. If it goes to 36, we're in hyperinflation.
Yeah. Which
Bitcoin's going to be worth. There's nothing that says this is a bad trade over 10 years, dude. Like I can't even, and he doesn't really need the money, right? Because he's still producing wealth. To me, this is the greatest trade in the history of mankind. Produce wealth, keep expanding your contact base of human beings.
Yeah.
Right. And contacts and information and understanding. Read a book once a week. Keep investing that $3,000 into Bitcoin. Don't worry about where it's headed. And hopefully one day you're going to have a problem because you're going to have $500,000 Bitcoin and you're going to have to start to get educated on what your options are. Yeah. Like selling call options, buying puts. Now you're going to start protecting your investment in a more sophisticated manner. But dude, I would hope you would say, hey, Gary, the price got cut in half. Ooh, you have an opportunity to double, triple your quantity of Bitcoin. Isn't that what you wanted? Now, the issues that come up are, the daughter gets cancer and she doesn't have insurance. The wife gets cancer. They don't have insurance, or you lose your job, or the tax man comes and hammers you. You have a big lawsuit. Like those are the things that are hard to manage.
Yeah.
I want to switch to the trading side. So I think what I'm hearing you say is risk management on a long-term 7 to 10 year position is not complex at all.
No,
just need to know duration and how much volume you're going to do. Right.
Yeah. Yeah. And are you protecting yourself outside of the investment to make sure that you don't have to then dip into that investment prior to your planned exit? Yeah. Yeah. It's exactly what it is. So
let's flip to the actually really would like to stay on the long-term trading stuff, because I think that there's a bunch of issues with the old-time Bitcoin holders. Somebody's selling 63,000 right here. Okay. It's not just Billy Bob that came in here at 45 2 months ago. I don't believe that, dude. This is whale selling. And I think that if the pressure's coming from the families, they've been through 3 cycles if they're lucky, and they've been brutally painful. PTSD, like you read about, right? Hey, I'm a billionaire. Oh, no, I'm not. Hey, I'm a billionaire, but I'm not liquid. Yeah. Hey, I'm a billionaire, but I can't really sell any of this because I'm going to dox myself. Hey, I'm a billionaire, but I don't want Bitcoin going to BlackRock. Like at some point, all the holders sell.
Yeah.
Right. The question is it voluntarily or is it forced through a divorce or death? Which I think that's a piece of risk management no one's doing. Like that's insane. The lack of trust, the inheritance, the whole piece down the road of what it costs you. I don't know if you saw all these tax rules came out Friday. I'll send you a copy, 300 pages.
Oh, wow. Yeah, I haven't seen that yet.
Dude, they want every lot.
Yeah.
Okay. They want every lot. I heard a guy last night say that literally every week he moves his coins between wallets just to make sure he's not getting rugged. And I'm like, I would not want to live that way. Having to every week be so scared of my Bitcoin sitting on my ledger account that I got to move it all the time. Ooh, make a mistake. I don't do that in normal banking, dude.
Right.
Moving my money every week between banks to make sure it's still liquid. Like that's scary, right?
Yeah, exactly.
So do you see the hodlers, the long-term, the $30, $300 Bitcoin guys, that their families are starting to put pressure on them because they haven't been included in the conversation?
Yeah, I can definitely see that, especially when you're looking at, hey, like you said, got in there $3, $30, $300, and you go, holy crap, it's 60 somewhat $1,000 now, and I've got 100, 500, 1,000, 5,000, 10,000, whatever Bitcoin, all of a sudden it becomes a discussion that happens. And here's the thing, even when you're with somebody, right? So let's say you started back then and you made it clear, listen, honey, this is what I'm doing for us. I'm going to make the decisions on this, period, end of sentence, right? Well, the problem is, even with that, now she's like, oh my God, we have this much, and we're worth 30 million, 60 million something, likely she and he probably came from working class parents anyway, and this was just a, hey, maybe we get lucky here thing. And all of a sudden, it's not just your decision anymore. And why isn't it? Because if she decides, hey, listen, or if it's a she and he decides, hey, listen, right, the other person, you need to sell this so we can recognize it, either because I'm scared it's going to go down, or because, listen, I just want to enjoy the fruits of the investment or whatever. And you're like, no, I'm not going to do it. Well, guess what? She goes to court and she says, listen, I loved you, but I don't believe you're doing what's best for us. And we'll go there. And now all of a sudden the court says, yeah, well, guess what? You've got to go ahead and liquidate this. The divorce is going in, she's, or he gets 50% of it. You need to liquidate it so we can do that. And so you're kind of forced into it. We'd be crazy.
I'll tell you something, dude. Having gone through that, it's not that simple. Now, if you can't afford a lawyer, see, this is a problem. If you can't afford a lawyer to make sure that, and you haven't done all your reporting, like in my situation, my perspective back to the courts was happy to sell the Bitcoin. Got to sell it all, though, dude. Got to sell everything, all the guns, all the gold, all the companies we own. Got to dump it all. Well, it's impossible. And my view was, hey, just because Bitcoin is the most liquid asset we have doesn't mean I have to sell it. Dude. Yeah. We sell it all or we sell none. That became a huge problem for the family courts. They didn't know what to do. Yeah. They're like, shit, dude. Like, first off, you can't force me. That shit's in my possession. Mm-hmm. Okay. And it's a very logical thing. Go, well, we own this company worth $400 million. Let's sell that. Okay. Then the question becomes, well, I've got some $800 Bitcoin. I've got some $8,000 Bitcoin. And I've got some $69,000 Bitcoin. Which one does she want? Yeah. Oops. Yeah. And then they immediately realize, oh, wow, there's not a good answer here. Because, if she wants the 800s, cool, dude. Don't call me when you get a tax bill. That's your problem. Well, they don't think about this stuff, though. See, like the first $20 million check I ever made, my wife at the time, like when she saw the earnings, it wasn't $20 million there. They'd taken out 35% for taxes. She's like, hey, dude, I thought you said you made 20 mil. Yeah, I did, bitch. Okay. Like, but you can only spend 13 of it because that's all we're keeping. And literally that girl would go spend the 13 million. I think that's the best risk management I can encourage with anyone, is to make sure that even if you do make a mistake, you still have earning capacity. Yes. Okay. And that's why I'm able to do what I do, because I'm not scared of going out and working tomorrow morning to create some new money if I have to. Now, I think that's getting ready to become more and more and more difficult to just go get a job. Okay, so it takes very little time to do long-term investment strategy. On the short-term trading, can you have a 6-hour to 8-hour day job, being a plumber, and be a good crypto trader? Yeah, no, see, this is the thing. People get caught up in, and this is one of the worst things. Again, I've been around doing this for 30 years now. So I've seen this move from our desktops and our laptops into the phones now. And the phones, Robinhood, et cetera, making this, they kind of gamify all this. So first of all, that's your first big thing. That adds more risk onto it, because you don't realize how emotionally involved you become in it, which they do purposely in the way it's designed, because it gets you to trade. They're making commissions off your trades. I mean, don't believe that your, platform brokerage that you're using, whatever, has your best interest at heart. They make money off your trades, period, end of sentence. Okay. And even those that have like a zero fee trading, they make it on all the other fees, your transfer out to your bank, your whatever else, whatever the fees are they have in there, they're going to make it up on there. Don't think that, $0 trading is not costing me anything. It costs you more on the back end with the other things. But when you're trading and you can do it with the phone, you're going to be much more emotional. Research continues to show this.
On top of that, you're usually working full time. And so you're walking down the hall at work or in the bathroom, you pull out your phone real quick to go, man, I need to do it right. Or you get an alert on your phone because price went to a certain level and you're making an excuse to get out of a meeting so that you can go make this trade, or just trying to, sit back and kind of do it right here under the desk in the meeting. And the problem with that, again, becomes that you're not focused. If you want to trade, you absolutely have to be disciplined, focused, consistent. You have to be, and you have to be patient. These are you can't argue about them. They're non-negotiable. These are what required. So anytime that you don't have one or more of those four, your risk goes up exponentially. Not just a little bit, it goes up exponentially. And especially that comes up with the focus. You can trade if you're working full time, but this goes back to understanding who you are as a trader investor. And I had that question about how many hours a week or how many hours a day do you actually have that you can focus and trade? And then you have to determine, okay, well, if this is what I have, what is the best way to trade? Maybe I'll do some price action trading on lower time frames, and I can do that and maybe make some daily income here. Or maybe it's better for me to spend more time focused on research and enter longer term swing trade or even investment positions on that. I can't tell anybody out here what they should do because it is wholly dependent on each one of them. And here's the other problem. You've got people out there with very large accounts saying, listen, you need to buy this here, sell this here, whatever. Well, the problem is that may not be the best move you could make. And it could end up costing you money when you could have made money in it. And so if you don't know what you're doing when you come to the markets, and especially if you don't know about risk management, how do you understand that entering there is a good entry? Because believe it or not, a lot of these larger accounts really aren't that great at trading or investing. They make their money.
What do you mean by larger accounts? You mean these opinion leaders or key KOLs?
Yeah. You're talking about, usually over 100,000, 500,000, these just really big accounts
People
where they make their
big
money.
Followers. Yeah.
Yeah. They make their money off, off you. If you don't have to pay anything, what did they say? You're the
product.
Right? Yeah, you're the product. Exactly. And so, but people, again, everything's emotional, everything's psychological, right? Traders come in and they say, oh, well, they have this huge following. They must know what they're talking about. So I'm going to do that. But again, if they say, hey, let's get out of here, do you understand where their exit is? Do you understand where their stop loss if they say, I'm going to get in here? And do you understand why that is? And so what happens is a lot of time people will get in there and they'll go all in. They'll ape all in, everything they have in on that position, hoping it gets to the target. But if it hits that stop loss, they're going to lose maybe 50% of their position of what they have. And it should never be that, right? Your risk management should be such that your losses are extremely small. Now, that's going to mean that your profits are not going to be huge, astronomical profits usually. But if we go in, again, with the thought process I said at the beginning, which is that, we're likely to lose more than we're likely to win, risk management becomes more important. And then we start looking at, okay, instead of saying swinging for the fences, can I make 1.5 or 2 times my risk on this trade? Doesn't matter what the dollars are, right? It just matters. My risk is, let's say, 1% of your account. If it hits my stop loss and I've got a $1,000 account, I'm going to lose $10. Okay. But if I hit my target, I'm going to make 1.5 or 2 or 2.5. So 15, 20, $25. That's the trade. And you do that as a trader, you do that consistently. Time and compounding take care of the rest of it. They take care with getting you where you want to get eventually. But as long as you continue to swing for the fences and not limit the actual loss on your account with that stop loss to something manageable, 1-2%, then the odds are you're going to lose everything you have and more, and you're going to come bring more money into the market. You're going to lose that as well. And this is why people become dissuaded with markets and trading and whatnot, because they don't enter intelligently. They don't use that risk management properly to begin with. So they put themselves in a bad situation. They set themselves up to lose from the moment they enter.
Yeah. I think just listening to anyone, including me or you, is problematic, and most certainly not the strategy you want to use for day trading. I could see following somebody like Michael Saylor going, okay, or you or Gary Cardone going, okay, these guys have been buying since 2018. They've suffered as much pain as I suffered, and they're still buying. Gosh, I kind of like that. I'm going to do the Warren Buffett or the Michael Saylor strategy, just DCA, sit on my hands, go back to work, or maybe give it to my wife because she's probably a better day trader. I think women are actually less emotional on trading than men are. But you're talking about a job that's going to require 8 to 12 hours a day minimum, right? Day trading and stuff.
If you really want to day trade, the reality of it is,
well, there's only two things. There's either trading or there's long-term investing. And you have to watch the day, right? I mean, can you do a bunch of short-term trades and not really be that involved?
So when you get in there, I mean, you can sit in there and, again, when you're getting into the trade, the idea is to say, listen, before I enter the trade, here's my entry, here's my stop loss, here's my take profit. Now, the best thing you can do is you can do that, set it, and don't watch it. You don't want to watch it because that's where you start getting emotional and it starts pulling it back against you. And you're like, oh man, it's probably going to go just below my stop loss. I'm going to move my stop loss down a little bit. And then you keep moving it down. And next thing, the risk management you had at the beginning is just non-existent. If you're, and again, it's going to depend on how you approach markets, right? How do you trade them? So like at the Trading Academy, again, we teach everything from day trading for income to price forecasting for wealth building, right? And so, people, when they come in with our group coaching, they have access to all of this and they can learn all of that, or they can learn just the one thing they want to do. But if you're going to day trade because, your return is going to be lower than what you're going to get over a longer term swing trade or an investment, you're going to have to make more trades and you're going to have to look for those setups. And so that requires more time in front of the screen, in front of the charts, right? It's not as simple as, okay, I'm working full time and I can just pull up my phone and go, oh yeah, let me go ahead and enter this trade right here and hope it goes the way I'm going with it. Again, you're entering that trade emotionally. You don't have clear-cut reasons why you're entering, where your stop loss is, where your take profit is. And not having all that ends up being much, much more risky. And a lot of people get caught up in that because they want to, they see that trading can be a life changer, and it can. I'm one guy, I can tell you it doesn't. But I can also tell you that until I recognize these things I'm talking about, until I was serious about this stuff and got out of all the initial, I'm going to be rich quick and all this kind of thing, and really actually sat down and learned, here's why markets move the way they do. Here's how to trade them effectively. And oh, by the way, risk management is the most important part of any of it. It's the most important thing I'm going to do day in and day out as a trader. Until I got all that figured out and done, it was all about losing money. And it was all about losing money consistently. And I was trying to work. I hated, again, I got into trading because I hated the idea of working for somebody because I'd grown up in the military and my dad had worked his way up and, did really well. But he would always tell me, like, I hate that motherfucker. And I'd be like, who? He goes, oh, Lieutenant so-and-so. He's like, I have to, I don't have to respect him, but I have to respect the rank. I have to respect this, the uniform. And man, that just had such a bad taste on me growing up in that atmosphere. I was like, man, there's no way I got to sit here and say yes, sir, to somebody who's going to, cause us issues. But so I got into trading, and that was 4 years of losing money until I really sat down with myself and said, listen, self, if you want to do this, if you want to be serious about this, we got to make a plan. We got to figure out what are the steps to get there. What do I have to figure out? How do I have to figure this out? Because all the BS I thought, which is the same thing most people think of when they first come in the markets, I've already done it all. I had to do it all back then. So I've been through all of it, and it doesn't get you anywhere. And until you actually get beyond that, like really, not just say you are, but really get beyond it, you're just going to lose money. And if you're trying to do it while you're working, you're going to lose more money. And it's always going to be somebody else's fault. It's always going to be the market. It's always going to be crypto whales. It's always going to be Wall Street.
Yeah.
But really, it's you. You're your biggest, you're your worst enemy.
For the short-term trader, what do you think the minimum amount of funding is for the short-term trader that wants to be like you what do you think he needs to be adequate to be able to call that a job?
Well, again, it depends on how they approach it, right? You've got to have. Here's the thing: when you
let me do it this way. I've got $10,000. I don't have a job.
Yeah, get a job.
$10,000 sitting in the bank. It's not enough money to be a day trader?
Well, again, what did we talk about risk management earlier? You have to be sure this works with trading too, because you're trying to build your wealth, right? You have to have enough income to make sure that your bills and everything are taken care of so that you don't have to dip into that account. What's the good of trying to build up wealth, through trading if you have to keep dipping into it and pulling it out to pay your bills? Well, now you're still working. I mean, this is the thing. People are like, I want to be a trader because I don't want to work. Well, no, if you're doing trading properly, you're still working, guys. And with the crypto market,
by the way, I've never found a career that I ran away from another one. Like you don't say I want to be a trader because I don't want to work for anybody. Like, I personally don't mind. Your dad just didn't like working for assholes.
No, he was okay with. He actually did. I mean, he did his 22 years. I didn't want to do that.
Yeah.
I was not a fan of that. No.
Yeah. I mean, I had some great guys that I worked for. I had some ding dongs. I learned from both of them. So,
yeah.
But 10 grand, see, I think your answer is right. Hey, you can't trade with 10 grand, dude. You blow it up, then what?
Yeah.
Right.
And what do you do to pay your bills in the meantime?
Right. Yeah.
Now,
what do you think the minimum is? Is it 100 and you're making money? If you have 100 grand in cash and you're making 60 G's a year, should you be you want to give up your day job for the 60 grand to day trade it? You got to make $6 grand a month, right?
Yeah. You got to make that a month, plus of course your taxes and whatnot, right? Depending on how you set it
I got to
up.
pay taxes when I trade?
Oh yeah,
Even on crypto, dude?
Yeah, all the time. Yeah, they're going to find you, and you got to pay the taxes, and you have to figure that out. Again, a lot of people get involved in trading, and they forget about the tax side of it. So part of that becomes, well, how do I set up the structure? I'm going to tell you right now, guys. If you want to trade for a living, you have to set it up as a business. Period. End of sentence. You got to take advantage of the IRS tax advantages of a business, right? So you can write off things like your education and fees associated with the trade, stuff like that. But the fact is, again, people don't think about this. So their taxes end up being a lot greater than what they expected them to be as well. And yes, you can day trade. You can day trade and make money. Here's the thing. It's not going to happen overnight. You have to learn how to do it first, and then you have to practice, right? It's like any other skill set. You have to practice it consistently and practice it correctly to where you get to that point. So everybody that starts when you're in trading, right? You're going to start here and you're going to go down. So you got to be able to withstand all that down before it even starts going up. Now, if you're out there, you can argue with me all you want, but this is what happens. If you're lucky, for most people, this is what happens. If you're lucky, this is what happens. But this only happens if you plan, if you're prepared for it. So can you take $10,000 today and start day trading today, no job and whatever, and expect to be okay? No. Because even if you eventually learn how to do it properly and you get good at it, what happens in the meantime? How do you pay your bills? Whatever. Now, how much do you need? It depends on who you are and your lifestyle and whatnot, right? Me personally, I couldn't even do it with $100,000 a year, right? And sustain my lifestyle. But somebody else, that might be more than enough for them. But you have to understand that it's going to take all this commitment, all this practice, all these things you have to learn prior to actually doing it, which means there is a time component just to get to the point that you can do it. I can say, listen, I want to go play football for a living. No, I'm not at 49 years old anymore, but when I was younger. But guess what? I'm not just going to be able to walk on to the whatever team out there. I'm not going to say a team because it's something, oh, it's so terrible, oh, it's so great. But you're not just going to walk right on without any experience, right? No. I had experience growing in school, middle school, high school, all that. You're likely going to need college experience to really have a chance. you're going to have a certain size on you to be able to play, right? So it's not like, hey, Mr. 110 pound going to walk up and think he's going to play the offensive line for the Buffalo Bills or something and just walk on without any experience at all either, But people think they can get into trading and do the same thing, and that's where they end up losing a lot of money because what they expect is not appropriate. It's not realistic when they get involved. So again, come back to your question. Can you do it? Sure. Is it going to happen overnight? No. So it's something that you should be learning while you have another job and practicing. So that way, when you get consistent with it, you can then maybe talk about transitioning. If you want to get out of whatever job you are, you can talk about then at that point transitioning from that job to the trading. But just to jump in because you got a few bucks, I hate to be the bearer of bad news, folk, but you're going to lose that, pretty quick, fast, in a hurry. To people like myself, I see Kelly Kellums out there. Kelly will take your money quick, fast, in a hurry. Nothing personal, but it's what we do for a living. We trade, right?
Yeah. Yeah, no, I agree. I think it's a 3-year tutorial to even get the basics of trading under your belt. And I would submit that is not a career. It's actually, for most people, it's going to be walking into a guillotine.
Yeah.
You're getting ready to have the most sophisticated bots on the planet trading all this vol, dude. And then you're going to have, right before that, Goldman Sachs is going to send in their best traders in the world, and they're going to eat you guys up it's just going to be, there's going to be more volatility, I think. I don't think there's going to be less. There's all kinds of M&A stuff going on. There's no freaking way a day trader can understand all the stuff that's going on, man. Like I know professional traders spend 30 grand a month just on outside data.
Yeah.
So that's 400 a year, 350. You're competing with a guy spending 350 a year on data. Okay. While you're bitching about your X Spaces, $20 subscription fee. And how long can you get TradingView, for $20 a month? Just to me, it's like, man, like for me, hey, go invest with my brother. He'll pay you 6% cap rate, dude. He'll give you some distributions and know that you're going to be in that trade for 20 years. Like there's maybe 10, that'll be the minimum to 20 years. You can't get out. It's illiquid. That might actually be a better savings program for some people. Hey, you just get into Bitcoin and you can't get out. Like that's why I like the wallets for the most part. Oh, it makes it really difficult to transfer, right? It slows the whole, okay, I'm going to liquidate my position here compared to an ETF or something like that. So, yeah, man, I think we could have another space on this. I don't want to destroy all your entire day over this, but the soft issues here are, to me, the biggest issues that get messed up. How long am I going into the trade for? Why am I going into this trade compared to something else? Why do I have some trades on that I have? Like I would be asking myself, why do I have a 6.5% mortgage on a home? And my wife keeps telling me that we doubled the price. Bro, if you doubled the price, you might want to sell it if it's an investment. Oh, it's not an investment. Oh, so a double's not enough, sweetie. You want me to sell my Bitcoin when it goes from 30 to 60, but the house went from 300 to 600 and I have a debt on that. I don't have any debt on the Bitcoin. You want to sell the Bitcoin? See, this is an emotional, like this is, and it's a lineage of emotions, like passed down by grandmas and grandpas. And hey, this is what success looks like for Alice from Idaho. She gets pregnant by the time she's 22. And she has 8 babies by the time she's 30, and they have a mortgage. And the husband is like exhausted every day on the farm or working for the local regional bank, making 120 grand a year. She's a nurse making 120 grand a year. They're saving nothing.
Yeah.
Nothing, not anything. There's no investment in their future. And this is why 98% of the people end up broke in America, right? Because there's no plan. Fucking no plan, dude. It's just the plan is bad, right? Like it blows people's mind that Saylor can be so like, I have a plan. Period, dude. That's it. This is my plan. And, just like methodical. That's Michael Dell. You haven't heard of Michael Dell in like 8 years, dude. He's been moving his shit around and he's still active. Most of his wealth still in Dell, right?
Yeah.
It's unbelievable how concentrated that cat is. How concentrated is Amazon? Jeff Bezos. How concentrated is Facebook?
Yep.
So anybody that tells you that concentration is bad, they absolutely have not studied. I could literally see somebody walking here going, I have 100% of all my wealth in Bitcoin. I would not think that at 27 years old, that's stupid. Because Sam's competent. Okay. He's not going to get strung out on heroin and then destroy his mind. He's going to be an active, productive member of society. For him to say that to me, I'd be like, yeah, dude, that's a good trade. You don't need the money.
Yeah. Yeah.
I got
Chris,
a question for you guys.
Yeah, go ahead.
I know as we're coming up on the hour and a half mark, but for me, this stuff helps me conceptualize. And so if both of you could give me an answer, it doesn't have to be too deep or anything, but can you give me an example of your life when some of the things that we talked about today, along with risk management, like what was the hard experience you had to learn where you go, wow, I did not follow my plan and that's why I'm in the situation that I'm in? Or, wow, I actually didn't have a plan. Like what was one of those snap moments where you're like, okay, I got to take this serious?
Yeah. So for me, I guess I'll jump in here first. It was toward the beginning. Again, I don't know if people really believe when I say, listen, I've probably been through everything you've been through as a new trader, and probably to a lot worse extent, because I was a lot more cocky back then, right? So as I said, the first 4 years, 3-4 years was just really bad. Lots of losses. I had to take on jobs to make money, to keep putting in it, to keep losing and whatnot, right? Didn't really have a plan, didn't really have a focus and whatnot. And so
you're saying you didn't have a plan retrospectively, but did you think you had a plan when you first started during those 4 years? Or even
sure.
when you went in, you were like, oh, gee, I'm just going to wing it. Like, what's the difference between the plan you thought you had and the plan you didn't have?
Yeah, no, my plan was I'm going to jump in here. I'm going to make a ridiculous amount of money. It's going to be so easy. And I'm going to be rich and I'm going to make all the best decisions in the world. And really, I honestly thought that was how it was going to be. And I've seen, so many thousands of people over the years that think the same exact thing when they come in. And it's when you finally get, if you're lucky enough to get to the point where you don't just give up completely and get out and just blame it on everything else, right? When you really sit in there and you go, man, okay, this was my fault. What I thought was a plan really was just stupid. It was really immature. I accept that. I take that loss. That's on me. Nobody else to blame but myself. When you can honestly do that, then that opens you up to okay, what's a real plan now? Now let's start talking real numbers. In 5 years, I want to have this much. And here, so I want to. So what are the steps I have to take to get there? Give yourself timetables, give yourself steps. The more clarity, the more clear you can bring it, the better it's going to be. But for me, I really thought getting into trading when I first did it was, I'm not an idiot. I'm a pretty smart guy. And so that I was young and I was cocky and I thought, yeah, my plan is I'm going to go in there. I'm going to make a lot of money. And I'm going to write, books about it and people are just going to be amazed and whatnot. But it was a really humbling experience when I finally stepped back one day and said, okay, let's add up. How much have I really lost here?
Is that what you did after 4 years? You literally went back and said, hey, what am I doing? How much have I lost? And then you saw that and you were like, okay, what am I doing? What's my goal? And you just locked yourself in a room and figured it out.
Yeah, more or less. You're a little bit more dramatic than it was, but yeah, really, it really did come down to that. It was like, you get in this and you're like, this is going to be my life. This is what I'm going to do. And 4 years in, you're like, what the hell's going on? I'm worse off than when I got in. I've accomplished absolutely nothing. And again, most people, it'll happen sooner than that, but they'll just get out of the market. They'll be like, okay, it's Wall Street's fault. Market, they manipulated me. In today's age, it's the crypto whales and whatever. Very few people actually really look at it themselves and go, okay, it was me. I made those mistakes. It is 100% on me. And until you do that, you can't possibly make a serious plan about the future. And it's not just with trading, it's with everything else that's going on in your life. Again, we can go back to relationships. If you keep getting the same type of person, you meet somebody, you get the same person, ends badly, goes off. Guess what? You go meet somebody else, same person, goes off. Guys.
Oh, dude,
it's
like
you.
You
You're
do 3 failed marriages, and you gotta kind of look in the mirror and go, "Hey, bro, you are the common thread here." Okay, like you cannot keep blaming everyone else. It's me. I'm the problem.
That's hard. That's hard for people to do. People are very, just as human beings, we have a lot of difficulty being honest with our failures, with our missteps, with those things.
I'm going to answer the question slightly different than Chris did. I think he's just smarter than me. It actually took me to Bitcoin to finally figure this out, bro. Like I have lost. First off, Patrick G's here. He's got his 15-year-old and 8-year-old sons listening. Nothing will be more important for me today than to know there are a 15-year-old kid listening to this. And dude, the 8-year-old kid, if you pick up something about trading equities and you end up being a billionaire swashbuckler on Wall Street or London, dude, go get it, dog. You can become a multi-millionaire and be free all over the world. Do what you want. Take your dad to the best fishing spots in the world. All you got to do is be willing to work really hard between 16 and about 40. Okay, 14 to 20 years of just hard work. Use your mind. I know it all sounds boring, but if you want to roll like I do and roll like Sam does and Chris, you just got to put in some work and become a really cool soldier. So I want to just say hello to these two young men.
Love it.
Because like for me, dude, there's nothing better than the education part of this.
Yeah.
Sam, I will tell you that I have lost at least $500 million by being stupid. I know that's a number of people are like, what, dude? Oh yeah, bro. Okay. First 27 million, I pissed it off. Buying stuff. I thought I was going to like do a supercharge. I'd meet a guy like Chris. He'd give me a wink and a nod. And I'd be like, oh, I got some high intel on this 2001 stock, put 3 million in it, see it go to zero. It'd go to 6, wouldn't sell it. Then it went to zero. Bankruptcies. Not my bankruptcies, but entities, too much. What's the word for it? Too much ego and too little brain power. Too much of a hurry. Did not understand about compounding at all. Like grossly misunderstood compounding. I think most people do misunderstand compounding. Grant, my brother, understands compounding very well now through his real estate stuff, but I would say that, and this is my mistake. My mistake is that I know I can always do something and make money. And so what I did was I've been like, if you do an interview with me and my brother, he will tell you, he thinks I have been massively frivolous with money. I agree with him. However, I am not stuck on money, and I would rather not being stuck on money and being frivolous. Like it's worked out okay for me. However, had I had somebody had an older person explain to me some of these things, I wouldn't have smashed. I mean, even for me to say I smashed 30 or 40 or 50 million, I'm talking, I left $500 million on the table. Okay. In compounding values, chasing deals. Funny thing is, never lost any money on the businesses I built. Anything I was into for 5 to 12, 15, 20 years, I made all my money on 5 trades, man. 5 trades. That's all. I just needed not to do anything stupid. The great trades come along. And if you have this mindset and people like Chris and myself around you, you're not going to get all confused because you're not going to be chasing all these glittery object syndromes. Like what I call the syndrome of the glittery object. It's like you want a wife, but all you do is look for girls on Saturday night, 2:00 in the morning. Dude, you're not going to find a good wife. Not at 2 a.m. It's not going to happen. And when you are with the girl that you really dig, Bitcoin, you're constantly looking at the alternate, that other, look at that, man. Iron went up 12% today. Bitcoin didn't do anything. Bitcoin went down. I'm a loser. See, that's the thing with trading. It is very like ego. It'll find every weakness in your ego and punch a hole in it and just keep punching you. I mean, over and over and over. Chris, am I right, dude?
Oh yeah, yeah.
It will
No,
humble
definitely.
you into the ground.
Yeah, emotions are the toughest thing being involved in the markets. And if you're a day trader, if you're trading, those emotions are exponentially greater. Again, it's again, there's ways to trade the market and you can do it. But the biggest thing you're going to have, first of all, is making sure you have the discipline, the focus, the consistency, and the patience to learn it and then to do it and to repeat over and over again, to focus on your risk rather than on your profit on that individual trade, to focus on creating a system and then implementing that system over and over and over again, and to to have to fight your emotions the entire time. It's not, I always say this: trading is simple. It's not easy, right? It's simple because price is really just moving through liquidity. That's all it's doing. Low time frame, high time frame. That's all it's doing. It's not easy because you have to fight yourself constantly, your emotions. And as I said at the beginning, we're not good at doing that anyway. We're very emotional. Emotions are what make us human beings, but most of us have never really learned to deal with them appropriately. And so in the markets, especially when you're smaller time frames and day trading, it amplifies those emotions even greater, which, emotions are going to lose you money in the markets, guys.
Yeah. Chris, thank you so much, buddy. I think we've probably run out of time. What do you think, Sam? Did you learn anything here?
I learned a lot, and I definitely couldn't summarize it now. But for me, even just the end and hearing the stories and essentially taking the lessons you guys have been saying and then relating it to real life, that for me is always really useful because that's just how I learn. Like, oh, okay, here's a lot of ideas, and then here's how it played out in real life and what I learned. That for me is super beneficial. So I learned a lot. I really appreciate you both kind of talking to the crowd, but then educating me as a young guy on what risk management really is. Because to your point, even though I may sound smart because I'm a long-term holder, I still don't necessarily have as good as a plan as I should have. So it's got my wheels turning in a lot of ways.
Yeah, that's awesome. You get around the right people, dude. You do the right things. It's just very it's hard to get around champions and not some of that wear off on you. And the same's true if you hang around a bunch of D grades. Yeah. Guess what's going to happen,
Exactly.
Hey, Chris, thanks so much, buddy. See you probably later in the week. I know there's a lot going on in the market, so appreciate your time. Everybody follow Chris, follow Sam, and appreciate everyone that's been here today and made comments. Sorry I didn't make a bunch of comments on the comments, but we love you guys and thank you for super chats. You guys have a great day. I don't think I'm going to be able to buy 57.5 on Bitcoin this week, but I've got a bid placed there, so we'll see.
All right. Thanks, Gary.
Thank you, buddy.
Thank you, guys.